Palantir stock. Palantir is the subject of today's video, folks. I am about to take you through my ultra bearish case on Palantir, my bearish case on Palantir, my base case, my bull case, and my ultra bullish case on Palantir stock in this video. My projections for future revenues, future net income, where I believe the market capitalization of the company is going, which yeah, it's a lot to go through. So I hope you guys enjoy this. I think if you're somebody that's really passionate around Palantir, I think you thoroughly enjoy a video like this. If you're not that into Palantir stock, I think you also enjoy this video because you can kind of just see how I run projections, how I think about these things and whatnot. Recording from a little different spot here today because that sun over at my normal spot over there is blinding right now. It was like in my face. I'm like, I think I'll record right here, okay? So very interesting time to be doing this video too because Palantir, very controversial stock, very divisive stock, gets people going. It's one of those stocks. There's a few stocks in the stock market, they get the people going, and Palantir is one of those stocks. Tesla's always been one of those stocks, certainly, that gets people just, very passionate, bearish, bullish. Just seems like everybody has an opinion on it. And Palantir is one of those stocks. So appreciate everybody joining me as always. Thanks so much for being subscribed. I've been wanting to do this video for the last couple of days, and I'm glad I finally am getting to do it here today, okay? Now, first thing is market capitalization. So market cap of Palantir right now is about, just over $30 billion. And I want you to keep that number in mind because when we go through my projections, I'm going to project out future market caps that I see Palantir going for upon different situations, okay? So just keep that number, remember a little over 30 billion is where the market cap is currently. Obviously the share price is around $14 a share. Now, I have a decent amount of shares riding on Palantir right now. 5,555 shares running on Palantir right now in the public account. Am I going to buy more Palantir stock, right? I'm up a lot on the stock, 60%. Am I going to buy more Palantir stock? The answer to that is probably, especially if Palantir shows any more weakness over the next few months, I'll probably be a buyer. When I run you through some of these different scenarios here today, the risk reward's pretty decent in regards to Palantir. Now, I do believe there's a stock or two right now in the market that probably have a little better risk reward profiles than Palantir, but Palantir has a very good risk reward profile, and especially if this stock shows any major weakness over this next few months, which we've gotten a lot of weakness here recently, so it's not impossible to imagine the stock continues to kind of be in a weaker place for the next few months here, okay? So I will say that. And by the way, if you want to track my moves I'm making in the market, I'm actually buying stocks tomorrow and doing hedges likely tomorrow in a Patreon portfolio. So if you want to see all the moves I'm making in my Patreon portfolio, check out the pinned comment down there. You get full access to see that portfolios through Fidelity Investments and all the moves I'm making in there. And we'll get to see if I'm buying Palantir in that portfolio tomorrow. The stock's had a hell of a year. That's just the best way to put it. Stock's up 121%. I know recently it's fallen a lot, right? Sure. The stock's still up 121% year to date. Like even with that massive fall recently, 121% is 121%. You're not going to see many stocks move up that much in a year period. Like it's been absolutely amazing, right? And this is a very important chart. I think Oman put this in the private group, or maybe somebody else, because we have a lot of Palantir shareholders in my private stock group, right? And inside the Palantir chat, we're always just sharing different stuff, that's out there and whatnot. This is one that's interesting. It shows you stock-based compensation as a percent of revenue in Palantir over time. And look it's been dropping like a rock, right? This is very good for Palantir. The reason this is very good is one of the old problems with Palantir, one of the old bear theses was they're just diluting shareholders to smithereens here. Okay, I haven't used that word in a few years. They're completely diluting shareholder value. They just keep pumping shares out there, stock-based compensation, and they're diluting the shareholder base more and more and more, right? Clearly, that's becoming less and less of an issue, and we'll see where it goes from here, but the trend is pretty promising, and that's definitely a good thing if you're a shareholder of Palantir or you want to be a shareholder of Palantir. Now, you tack on top of that, if you have stock-based compensation coming down and continues to come down, and let's say simultaneously you're buying back shares, that's where things can get really, really fun, right? Check this out. This is stock-based compensation as a percent of revenue over time. Obviously, we know what's happened with Palantir. Over the last several quarters, it's gone down immensely. Meanwhile, a company like Datadog, their stock-based compensation is actually growing substantially as a percent of revenue, right? ServiceNow, kind of in the same range. And Snowflake stock-based compensation is, still extremely high. I mean, stock-based compensation as a percent of revenue, 42%? you ought to be flipping my flapjacks. That's an incredibly high number, right? So if you're going to, and Palantir gets grouped in with these stocks like Snowflake and Datadog and ServiceNow and whatnot. So at the end of the day, just understand like Palantir is running their business off in a far better place when it comes to stock-based compensation than any of their other competitors, if you want to call them that, okay? Alrighty, guys, so with that being said, I want to show you guys out. I thought that was important right off the bat here. We're going to start here with my ultra bearish case. Then we're going to go into the bearish case. Then we're going to go into the base case, bull case, and the ultra bullish case, okay? Alrighty, let's get ready to have some fun, folks. You ready to see the ultra bearish case? I don't know if you're ready for this. This is a little scary, okay? Here's my ultra bearish case in regards to Palantir stock, okay? So this is the way I put through my projections for all different stocks. I have Meta projections, I have Tesla, I have PayPal. Let me know if you guys want me to ever go over my PayPal bearish, ultra bearish, base, ultra bullish, and my bullish case for PayPal. I can do that in the future. Just let me know in the comment section if I see enough people interested in it. If I see enough comments, wanting to see my PayPal numbers, maybe I'll do it for you guys in the next few days or whatever. Okay. But so starting out here with my ultra bearish case. Okay. So first thing I have is my revenue number projections, what the revenue growth is on average, right? Now we know companies don't grow perfectly. I always do all my numbers just as a consistent average. And the reason I do that, I even have it, I think, listed somewhere here. I run projections with consistent numbers since it's impossible to predict freak years of economic growth, recessions, geopolitical issues, all those sorts of things, right? If all of a sudden companies want to spend like crazy on products like Palantir, that could help their numbers out in a substantial way, right? We know over this past year, companies really tight on budgets, that's going to make it a much tougher environment. So the growth rates will always move around. I just like to average it out over the coming years, right? So as far as revenue, I have them doing about $2.2 billion for 2023. They should be right around there. Now, in my ultra bearish scenario, I have them only doing 12% growth a year. That would be very bearish, extremely bearish for Palantir. This is a company that analysts on average are expecting this company to have a nice reacceleration of growth in future years. So the fact that not only would they not have a reacceleration in future years, but their revenue growth would go down substantially is extremely bearish, okay? So I have them only doing 12% on average. That would put them just under $3.5 billion of revenue in 2027. That's very, very bearish, okay? Now, my ultra bear case assumes Palantir continues to build their business with government contracts and attracts minimal new commercial customers. The ultra bear case assumes company never gets back to Alex Karp's old goal of 30% revenue growth, not even close, obviously, if you're doing 12%, right? Ultra bearish case assumes the economy will be weaker in 23-24 with a stronger economy in 25 through 27. Now, in terms of net income, I have them doing about $125 million in net income roughly in 2023, and I have them doing 32% growth, which would be extremely bad for Palantir. If Palantir averages 32% net income growth, for a well-established company, that would be phenomenal. For Palantir, it would be absolutely awful. This company just barely reached profitability, so usually you should expect companies over the next few years coming into profitability to have hundreds of percent growth in terms of net income, if not thousands of percent growth, or at least 50% plus, like 32%. I'm telling you, if they only average out for the next 5 years, that's so freaking bearish for Palantir, okay? Net income growth assumes inflationary pressures will not hurt the company in future years. Net income growth assumes Palantir will have trouble controlling spending in future years. Palantir is in an infant stage of profitability in 2023. An ultra bear case assumes net income growth will be decent as company matures. Decent, so, like I said, this is a horrible number for Palantir. Palantir products such as Apollo, Gotham, Foundry should carry the business with AIP related matters not helping in any substantial way for this ultra bearish case. Important to note, all companies do not grow perfectly every year. Some years companies grow or shrink faster than expected depending upon many various factors. So in this sort of scenario, and by the way, here's basically some more info on kind of my market caps and P's and things like that. I run everything from a 10 to a 50 P on projections. It is not up for me to decide how much the rest of the market, the stock market, or how much the stock market's willing to pay for a stock. Running all these different projections allows me to understand where it could be valued in different scenarios. The stock market tends to overprice or underprice stocks over time, right? Valuations are determined upon interest rates, growth rates, investor risk tolerance, among other things. So in this scenario, in 2027, the company would only have a net income margin a little over 10%. For a company in Palantir space, a 10% net income margin as a more mature company would be very bad, very bad. You know, this company should be hitting 20% plus in future years. So this would be very, very bearish. Now, in this scenario, obviously, if Palantir is going to be growing net income very rapidly over the coming years, they should be able to command somewhere between a 50 PE and 100 PE, right? Like, the market in general is going to trade at a 15 to 20 PE, but keep in mind, you know, super fast growth companies obviously are not going to trade at a 15 to 20 PE. Like, that's just not how it works, right? They're going to command between a 50 and 100. You look at a stock like Tesla's a perfect example of, you know, a stock that obviously commands, you know, that 50 to 100 PE. Amazon's always been one of those companies, right? Even though their main business, which is e-commerce, is a very poor margin business, they still command always usually between a 50 and 100 PE, sometimes several hundred PE, because at the end of the day, people understand the long-term growth there, right? So for Palantir, I kind of always look at the 50 PE as kind of the bare minimum of what Palantir will command in future years. And in this ultra bearish scenario, we have a market cap of less than $20 billion. So that would mean I would hold this stock for years to go in the future and lose money. I'd be obviously extremely bearish, okay? Alrighty, that's the ultra bearish scenario. The good news is it only gets better from there, okay? Now let's get into my bearish scenario for the stock. Here's the bearish scenario. So for the bearish scenario, I have them basically only growing around what they're going to grow this year in future years. Now, once again, analysts are all projecting that Palantir is going to be able to grow their top line much faster in future years than they're currently growing it. I'm in full agreement with that, and you'll see that in my base case and then my bullish cases around Palantir. But for the bear case, it's just they can never grow faster than 16%. They're just stuck there at like a 16% growth rate on average, right? Bear case assumes Palantir continues to build their business with government contracts and attracts more commercial customers. Bear case assumes company never gets back to Alex Karp's old goal of 30% growth. Lucky to be at half the growth rate, which, yeah, it's about half the growth rate, right? Bear case assumes economy will be weaker in 23, 24 with a stronger economy in 25 through 27. Net income growth, this is still a pretty bearish scenario, is 50% average for the next 5 years. For a company that's at Palantir's stage of, infant profitability, they should be able to grow much faster than that. So this would be a pretty bearish scenario. So you'd get up to about $632 million of net income in 2027. That would put them at a 15% net income margin, which is still not very good. Because remember, by 2027, Palantir should be a much more mature company. So 15% net income margin for a company in this industry, it's not good. That's pretty dang bearish, just to be quite frank. Okay, net income assumes inflationary pressures will not hurt the company in future years. Net income growth assumes Palantir will continue remaining disciplined with spending. Palantir is at infant stage of profitability in 2023, and bear case assumes net income growth will be strong as the company matures. Palantir's, obviously, products are going to continue to come through. The bear scenario puts the market cap somewhat similar to where we're at right now, right? That would mean I hold this stock for several years to go in the future, and I literally make no money. Technically, I'm already up 60% on the stock, so I'd make pretty good money on the stock, but it wouldn't be much there, right? So that's a bearish case. Now let's go into the base case, okay? Base case. So here's what I have for my base case. I have the company doing $2.2 billion still this year in terms of revenue, and I have them accelerating growth, obviously with AIP, with how many new customers are attracting, how much attention, right? They should be able to, and obviously if we get into an environment where companies are a little more focused on some spend that will help their business out substantially, we should be able to get up to like 22% revenue growth for the company in future years on average. So if that's a situation, we're doing a little less than $5 billion in 2027. I think that's a pretty darn conservative number. I think if you were projecting anything less than $5 billion in 27, I think that's actually pretty conservative. I wouldn't necessarily put into the bearish camp, but I think it's a very conservative base case, and that's kind of what I was looking to do here with my base case. Okay, base case assumes Palantir continues to build their business with government contracts and attracts many more commercial customers. Base case assumes a company never gets back to Alex Karp's old goal of 30% growth, right? So in this scenario, I have the company doing about 75% net income growth on average a year. That would put them just under $1.2 billion in 2027, and then put them at a net income margin of about 24%. Now, a 24% net income margin in 2027, that sounds pretty realistic to me for the company in this industry as more of a mature company if we're thinking out 4 or 5 years into the future. And so I think that's definitely a very doable thing. I don't think it's a crazy assumption there. I think it's pretty darn realistic, okay? So that's kind of what we're working with there. We're sitting at a market cap. Once again, the company should, if we're growing net income on average 75% a year, which once again is pretty realistic in my opinion for a company that's in infant stage of profitability, we should be at a minimum of like a 58 billion market cap or so in 2027. Now you can say, if this company's growing at these sorts of rates in this industry, they should command much above a 50 PE, right? 50 is kind of laughable, but I'd rather be just a little conservative. So there'd be, we can call it maybe 80 to 90% upside from here over the next several years, which certainly wouldn't be too bad. And that's, once again, if you're throwing a 50 PE on it. And once again, if the company's growing at these sorts of growth rates, should be able to command a PE much above a 50, right? Alrighty, so base case. Already, time for the bullish case, and then we're going to get into the ultra bullish case in regards to Palantir. Okay, so my bullish scenario has a company still just being conservative this year, $2.2 billion of revenue, 16% growth, and then I have them getting up to 27% growth on average for the next several years after that. Okay, so that would put the company at about $5.7 billion of revenue in 2027. Right, bull case assumes Palantir, I think I spelled something wrong there. Palantir continues to build their business with government contracts and attracts many more commercial customers. Bull case assumes the company can never get back to Alex Karp's 30% goal. That's what's crazy. My bullish scenario still doesn't even have Palantir getting back to Alex Karp's old goal of 30% revenue growth. So, you could make an argument that maybe my numbers are a little more conservative than certainly some folks out there. I had the company grow net income about 85% on average a year for the next several years. We'd put the company just under $1.5 billion of net income in 2027. That would put the net income margin at about 25.5%, which I think is pretty realistic for a company like Palantir. And it'd put the market cap at around a $73 billion market cap if you're slapping a 50 PE on it. If they're growing at these sorts of rates, though, it's going to command way bigger than a 50 PE, I can tell you that much. But nonetheless, I never run my projections anything higher than a 50. 50 is my max. I go there. And so that would put it at about $73 billion market cap. Companies at about a $33 billion market cap today. So obviously, buying shares now, if the bullish scenario plays out, is a pretty dang good steal deal. Now, never mind that, if we're in some sort of scenario where the stock goes down over the coming months, and let's say we get back into the market cap of in the 20s again for $20 billion something market cap, yeah, then the risk reward gets pretty dang crazy for the bullish case, okay? Alrighty, now it's time to get to the most fun one, my ultra bullish case for Palantir stock for the next few years, okay? Alrighty, ultra bullish case. I have them still just doing $2.2 billion in this year, 16% growth. And then I have them getting back to Alex Karp's old number of 30% revenue growth on average over the coming years. If they do that, they would be at about $6.2 billion or so in revenue in 2027. Ultra bull case assumes Palantir continues to build their business with government contracts, attracts many more commercial customers. Ultra bull case assumes a company gets back to Alex Karp's old goal of 30% revenue growth a year. I had the company doing about 90% net income growth on average a year over the coming years. That put them at just under a little above $1.6 billion of net income in 2027. Net income growth assumes Palantir will continue to find small cost savings in business while remaining disciplined with spending. Palantir is at infant stage of profitability in 2023. An ultra bull case assumes net income growth will be strong as company matures, right? Palantir's products such as Apollo, Gotham, Foundry should carry the business, with AIP-related matters being the cherry on top. Future products and services also. We know Palantir's work. They don't spend all that money on R&D for no reason. They have future products and services coming that we don't even see today, right? And so this case assumes that some of those future products and services that we're not even seeing today in 2023 that will be launched over the next few years will be successes, and it'll boost that revenue up to Karp's old goal of 30% a year, right? Now, in this scenario, obviously if they're growing like this, 50p is kind of laughable, but we'll slap a 50 on it, and we're at about an $81 billion market cap in this scenario, right? Which is, yeah, obviously considerable upside from here in regards to stock over the next few years. That puts the company at a net income margin of just under 26%, which is pretty, kind of in there for my opinion, right? So those are my scenarios there. Obviously, the great thing with Palantir is as a company becomes more and more profitable and they just start generating more and more net income, the great news for Palantir is they're going to be able to do more and more share buybacks over time, right? Or they could do acquisitions that could help out that top line growth rate if they choose to. Let's say they see some newer software out there and they're like, oh man, we could sell this to our customer base. That, obviously they're going to continue to build out their customer base. And they're like, this is a perfect tuck-in acquisition. We're going to be able to sell this to our existing customers and get up to a much higher growth rate. That's the beautiful thing about as you throw off more and more net income. We could do share buybacks. We can take a bunch more shares off the market, which is certainly going to help earnings per share if you do that, right? And certainly mitigate any stock-based compensation problems. But those little tuck-in acquisitions can help boost that top-line growth rate in quite a substantial way, right? Also, obviously, the more the company builds out its cash balance while continuing to have no debts, which this is one of the best environments not to have debt because we're in a very high interest rate environment and we'll probably be there for, we'll see, maybe a year, maybe 2 years. We'll see how much longer we're going to be up here, right? But it's a great time to be cash loaded and to not have debts on your balance sheet, right? So is there a day when Palantir ends up having $4 billion, $5 billion, $6 billion of cash on the balance sheet? Probably. And it's probably not in too far of the future when you think about how its net income should ramp over this next few years, right? Especially as long as Karp and the team keep expenses, let's call it in check. I think that's definitely a realistic possibility, right? So yeah, the risk reward in Palantir is pretty darn intriguing. Like I said, there might be a couple stocks I like the risk reward a little bit better in, but yeah, especially if the stock falls over this next few months and we get under a $30 billion market cap again, that's really when I get super interested in loading up shares. Not to say I'm not buying any now, but it's just like the lower you push a stock price in kind of with what I'm projecting out here, it makes it a much more exciting opportunity. So yeah, I appreciate everybody joining me as always. Thanks so much, folks. Hope you got good value out of it. Let me know in the comment section if you did. Also, let me know in the comment section if you want me to share my PayPal numbers in the future. I can always run a video like that if you guys like something like this, okay? Appreciate y'all being here. Thanks for being subscribed. If you want to see the moves I'm making in my portfolio tomorrow, as well as future weeks as far as the Patreon portfolio goes, my hedges I'm doing, the stocks I'm buying, all those sorts of things, check out the pinned comment down there. You can join us in there. It's like $19. It's a no-brainer to be part of that. Plus, you get access, obviously, to the Discord chat that's in that as well. So appreciate everybody. Much love as always, and have a great day.